Back with us here on Trading Hour, and let's now get you some market fundamentals. And Ashi Anand, the CEO and founder of IME Capital, is joining us on the show this morning. Ashi, good morning. Thanks a lot for joining in. I remember speaking to you the last time about real estate, and a lot of your microtrends PMS portfolio has a 10% concentration towards the real estate stocks. Now, my question to you was that most of these names, be it Sobha or be it Macrotech or DLF, most of these stocks have seen a surge anywhere between 100 to 200% over the last 12 months. Most of them are also trading above their historical averages when it comes to the valuations as well. Do you still find comfort in these real estate names? Do you think that the upcycle has just begun and there is more to go?
Hi, thank you so much for having me on the show. I think broadly, yes, we have seen real estate stocks do extremely kind of well. Some kind of a breather post a very strong performance is always kind of possible. But if you're just looking at the longer term kind of outlook, right, you are actually seeing real estate demand coming back after virtually an entire lost decade for the real estate sector. If you look at multiple kind of drivers of real estate demand, it is a direct play on discretionary consumption, urbanization, nuclearization of families, etc. All of these are very, very strong fundamental plays from an Indian market context. According to us, what you are seeing in terms of real estate demand, you are still at early stages of the kind of cycle. What if you just look at results of real estate companies? A company like DLF has had a couple of quarter of $1 billion plus pre-sales, and these numbers were unheard of earlier. According to us, the next big kind of uptick that you're going to see, you're likely to see, is that the price momentum, which has really started in terms of real estate prices. You have seen inventories correct across the board and across cities. Now, as inventories basically reduce, you are going to see a time when real estate prices also start moving up. And this will also kind of help lead to increased investment demand as well as end user demand. Really, the way we kind of look at it is you are seeing real estate at probably the early stages of a multi-year cycle. There's also a very strong shift happening away from unorganized players towards organized players, and there's a very big value migration undergo there. From all of these perspectives, according to us, while stocks have moved up, they are probably factoring in a lot of these positives. Given the very strong longer-term outlook, it is a space that we are still comfortable with, and we believe that they can continue to do well going forward.
What about the entire telecom space? There is this whole narrative about how post the Vodafone FPO, there's a lot of interest now in the telecom sector, especially from investors. Do you see this space broadening out? Is there a case to be built about a three company or rather a 3-player market now sustainably over the next couple of years?
So I would probably argue that the Vodafone FPO is not necessarily a positive from a market or from specific stocks perspective, right? A few years back, you were actually moving towards a narrative of a 2-player market, being Jio and Airtel and possibly Vodafone pretty much withering away. With the FPO, Vodafone does have kind of capital now in order to be able to invest. You're moving from a 2 to 3-player market. There was going to be a very strong push towards kind of pricing improvements with all players adequately funded. I think some of those trends could potentially reduce a bit. We like telecom, but we kind of like telecom the moment you accompany it with certain other services. So like, for example, Reliance is a part of our portfolio. We believe Reliance Jio has a lot of value because Reliance Jio can really upsell various other digital offerings itself. Just pure play telcos is broadly okay because it is important to understand that there is a very large 5G capex cycle underway. This will take up a lot of capital requirements. And at least in the near term, the kind of incremental value add moving from 4G to 5G. Most consumer apps kind of work fairly well on a 4G network. You really need the entire enterprise app ecosystem to really develop before telcos can really start enjoying pricing benefits of the investments they're doing in 5G networks. So the way we look at telcos is we prefer a telco as a larger digital play where having subscribers can be upsold various other forms of services. But just a pure telco on its own, we aren't as optimistic on.
Right. Just before we move ahead, some flashes on your screen, and those are coming from Bloomberg, and that pertain to GAIL. And the flash says that the company is going to shut its Dabhol LNG terminal from the 15th of May ahead of the monsoon rains. It looks like a maintenance shutdown. So that's the flash coming in from Bloomberg. We're yet to officially hear from the company on that front. The stock, though, is up 2%, trading above the mark of 200. We'll keep you updated as more news comes in on this front. But Ashi, a part of your portfolio is also focused on the specialty chemicals, CRAMS and the API section, and it has three very specific names, one of which includes Syngene, there is PI Industries and there is Aarti Industries as well. I wanted to specifically ask you about the specialty chemical space, right? Just like pharma, it's a very stock specific sector because every company has its own specialization there, but most of these companies have not had a very good last 6 to 12 months. What's still keeping you hopeful within this space? Do you see better days ahead for the companies? Is the worst over for specialty chemicals going forward?
So let me answer that in two specific ways. One at the industry level and then in terms of specific stocks. Because I think the investments we have are specific stock focus and there are specific triggers against each of these stocks. But firstly, at an industry level, I think if you go back a year and a half, there was a lot of optimism around value migration that you were expecting to see from China. What you have seen over the last year is post the COVID reopening of China, a lot of specialty chemical supply from China has actually come back into the markets, and that has led to a certain oversupplies in certain kind of chemicals and pricing pressure as well. Now, I think the worst of that pressure is actually behind us. However, I don't think you're in for a very rapid rebound. You need demand to come back up to be able to take up some of the supply. So I think while the worst of the pressure in terms of specialty chemicals is behind you, there is likely to be an uptick, but it may be gradual. It's not necessarily something which will come in the immediate near term. However, what happens is if you look at stock specific, right? So Aarti Industries, for example, has certain very large projects which are going to come on stream over the coming years, certain new large contracts that they've signed. So that is something that can actually help boost Aarti Industries. Syngene really have the whole Mangalore CRAMS facility, and you're seeing a larger shift away from contract research to contract manufacturing, which really opens up a whole new leg of growth for the company. And PI Industries, according to us, is clearly the best agro input exporter from the country. So we've really approached this from a stock-specific approach. From a longer-term perspective, we see a lot of value in the space. We understand there's been some amount of pressure, but I think that the worst of the pressure is behind us. And when you're looking at specific stocks, there are some very interesting companies which are out there.
All right. I wanted your thoughts also quickly before we, wind down this discussion on HUL. I mean, expected to come out with numbers anytime soon. But the fact of the matter is the stock has been a huge underperformer in the last many weeks and months. Is there anything that the numbers can do to take the stock out of its slumber?
So it's a space that we've been looking at. And I think it's not just HUL, it's the larger FMCG, larger consumption space, which is struggling and which is kind of broadly underperforming. What you have seen, especially over the last year, is consumption demand, which has been very, very strong over the last couple of decades, has actually been quite weak in India over the last year and a half. Rural demand in particular has been really weak, and this has been accompanied by a certain level of weakness in terms of urban consumption as well. Now, it's really this weakness on companies that are really priced in to a decent extent towards perfection, right? When you're trading at 50, 55 kind of Ps, you really don't have too much room for disappointments. When you have this kind of growth weakness and you have a lot of the other parts of the market which are performing, you're really seeing money move away from consumption. You're seeing money move away from banking franchises towards a lot of these new emerging themes. Until consumption doesn't kind of come back, we probably would expect the space to continue to underperform. But from a longer term perspective, HUL is clearly one of the best franchises in India. So it is something which I think from a longer term perspective is fine, but we don't really necessarily see it perform very significantly in the nearer term.
Ashi, Anand, pleasure speaking to you as always. Thanks a lot for sparing time this morning and joining us on the show. That was Ashi Anand there of IME Capital. But time for a short break here on Trading Hour. When we return, we throw the spotlight on the telecom sector and we'll be joined by KPMG India's Purushottam KG. Stay tuned, we'll be right back.